Hello, everyone, and welcome to another edition of the Smart Investor Stock and Financial Market Update. I hope you all have been having a wonderful day so far, and I hope you will have a wonderful day in the future. Now, in today's video, what we're going to take a look at is the markets as usual to see what's happening in the markets, what areas to look at on a technical outlook. We're also going to take a look at when to exit a market, because during bull markets or in any position that you may have, whether it's a stock, futures, or forex trade, you have to be able to recognize when to get out of a particular market. There are folks that hold on to stocks and investments forever and ever and ever. They watch it go all the way up. Let's say they buy it at $10, it goes up to $100, it goes back down to $12, and they are still holding that particular stock, while they should have probably sold it and went on into or moved on into something else. Okay, so we're going to take a look at a specific example of a ETF that was doing very well earlier in the bull market, and it faltered out, and you have to know when to exit that particular market. Also, I'm currently offering a set of free stock investment classes, well, for the stock forex or futures market, one-on-one classes to help investors to refine their strategy and ultimately make money in the markets. Because what I've found is that there's a lot of general information out there about the markets, but there's not specific one-on-one attention. So what you could do below this video is sign up for a free stock investment class. Whether you trade stock, forex, or futures, it will be of high value to you. Okay, so the chart in front of us is of the S&P 500, and we are approaching resistance at this 2800 level. I have spoken about this resistance over the last couple of days at the 2800 level, and what we want to do is we want to see the market pierce this 2800 level and close above it. If you notice, over the last couple of months, the market has approached this level once, twice, three times, and have all failed. So what we want to see is if the market is able to close above that 2800 level, ultimately to challenge the all-time high in S&P 500 just below the 2900. So these are the two areas to look out for in this market. Notice we are still in a sideways dilemma. The markets are slightly positive for the year now. 2018 market started at this point, and we are currently here. So the market is up slightly for the year, but that can change at any moment, as you have seen for the year so far. The market has just been in a choppy channel. The Dow Jones Industrial Average is looking pretty much the same. S&P 500, I expect resistance, or the market to experience some resistance where it is now, and we may have some challenge getting above that. But if we do get above it, that'll be fairly positive for the market. And the market is up currently at some 3.75 points, just up barely. That's 0.13%. Looking at the Dow, we see that the Dow is up 50 points, or 0.20%, but the Dow is still not at its resistance point, and this area of resistance in the Dow is not as defined as S&P 500. You have 1, 2, so the market is more, the resistance area is more sloping downwards, as opposed to horizontal like what the S&P 500 saw. And support is down here at this 23,500 level. And as I keep saying, if the market closes below this 23,500, look out below, because we should see a fairly strong sell-off in this market, because most market participants now are very bullish this market. They have bought into this market over the last 9 years, and if we start to close below critical support levels, what you will see is a fairly strong sell-off in the market. Sell-off does not mean a new bear market. The sell-off just means that we could be in for a longer correction in the market. The DAX, the German DAX this morning is up 67 points. The FTSE is up 13, and the CAC 40 is up 33. And let's just take a quick look at the FTSE, because the FTSE is a market that made a new high earlier this year. And as we can see, the market is coming up again and trying to challenge a high just above 7,800. Notice how this new high was made in May. We have had a slight pullback, and the market is looking to challenge that high again. So the FTSE performance has been fairly strong over the last couple of months. What has the market done for the year? The market is still just breaking even for the year. So it started the year around 76.80. It's at 76.80 now. But as a trader, using the method that we used, you could see that there was definitely a buy signal in the 7,000 level to catch that up move up to 7,800 for a couple of points. US dollar index is up this morning. US dollar is seeing resistance at this 95 level, and the market is just hovering at or around between 94 and 95. So we're not seeing much movement in the dollar, and for the market, the dollar to continue to see gains, we need to see a close above 95. Gold market this morning. Let's just take a look at the gold. We see gold is down, and after finding support just below 1,000, or just at 1,240. Let me draw the support line here. Resistance is at 1,360. If we do start to close below 1,240 and 1,200, that would signify a larger pullback in the gold market. If we and as I discussed yesterday, we're in a situation with gold where we are seeing a reverse head and shoulders bottoming pattern. The market is trying to put in a longer term bottom, and I drew the parameters yesterday where you had the shoulder, the head, and the other shoulder. And for those of you who are familiar with technical analysis, this is a bottoming out pattern. To reverse head and shoulders, and what we're looking to see is the market close above the neckline, and the neckline comes in just below the $1,400 level. If we start to see the market close above that level, that will be fairly bullish for the market, for this gold market. So gold, I know there are a lot of gurus speaking about gold now, but just get some evidence that the market has actually broken to the upside before buying, because if we do break out of this pattern, we could see fairly quick and strong gains in the markets. But at this point where it's a bit uncertain, it is best to hold off at this point in time until we get a definitive signal. Looking at the crude oil market, oil continues its march upward, and as we can see, it's just below the $75 level on the futures. And just speaking about a reverse head and shoulders pattern, we had one in the oil market also, where we saw a shoulder, a head, another shoulder, the head, shoulder, shoulder. And what we saw is that the market broke above the neckline, came down a little, and then we saw the market break out. So that is the power of these reversal patterns, and it is good to pay attention to them and take advantage of the trends that do emerge from the reversal pattern. Okay, so that is a broader look at the markets. Now let's take a look at the the Ibb stock. Now this stock, or this ETF, sorry, it's a biotechnology ETF, was tracking the biotechnology sector. It is rebounding over the last couple of months. But looking at the weekly chart, we saw that this market went from 2009 at $20 all the way up to $130. So we saw quite a strong move in the market, over 500-600% move in the market, and that was a fairly good upward movement. But what we saw is that the market came down and reversed down to $80. Now, what I'm saying is that it doesn't make sense holding on to a market through a 600% rise and then watch it drop almost by 50%. A better way to look at it is to have some sort of trailing stop behind the market, exit the market once it starts to retrace, and look for other opportunities. If we get a buy signal with this market again, that is when you can jump aboard for another move to the upside. But during this period, because this is a weekly chart, so we had a up move from 2009 to 2015, so roughly 6 years, and then we saw between 2015 to 2016 a retracement period, which you should essentially have been out of this market looking at other stuff. When we got a buy signal again in the market, that is the time to get aboard the market again. Now, this is an example of a stock that has done fairly well, but there are stocks that folks will get in at $20, the market goes all the way up, and then the market goes all the way back down to $20. They bought at 20, saw 600% gain in the market, and then rode the market all the way back down to $20. You can't make money consistently in the markets like that. You have to have your exit strategy, and one of the best exit strategies is a trailing stop. If you need more information on trailing stops, developing an investment strategy, as I spoke about at the beginning of the video, you can sign up for the free investing or trading class. Because what I find is that a lot of investors, the reason they are not consistently profitable in the markets is because they don't have a specific method that fits their lifestyle to profit from the markets. Investing and in the markets is not as difficult as some folks make it to be, but it's also not as easy as some folks make it to be. And what is the key defining thing is having a systematized strategy, set of rules to exit and enter the markets, and also have some general knowledge of how the markets function. And that's why I'm offering the free one-on-one trading class, because what it can do is definitely shorten the curve of you learning the markets. It doesn't make sense you year in year out you're learning, you're getting mediocre returns. The best way is to get one-on-one attention and one-on-one training, and that's why I'm offering the free class. You can get details about that class below this video. Thank you very much for listening, and I look forward to speaking with you all. I've been having some very good sessions over the last week or two on this free class. I'm not going to have it open forever, but I've been really helping a lot of investors in the meantime. Some of the investors want to join and work with me longer term to develop their skills, and that is fine also. Thank you very much for listening, and I hope you have a wonderful day.